robust, almost close to 8%. Polls for the second quarter GDP are also indicating a similar sort of print at around 7.5%. Do you see this economic stability as an outlier compared to a lot of the other global markets, or will this uncertainty around this trade tariff deal with the US be a bit of a dampener going into the second half?
Yeah, so actually the drop-off in inflation in India is important. I mentioned in answer to your earlier question, nominal GDP growth, which matters much more for corporate top line than real GDP growth. And I think that's where the negative surprise came in. I think effectively the decline in inflation is telling us that policy was too tight. And likewise, credit growth actually falling to low single digits. This is not what one should be expecting from an economy that is still developing very rapidly. So what we're anticipating, hopefully, is that with the policy easing measures that we've had, the nominal GDP growth environment will accelerate, as I said, from kind of mid-high single digits to mid-low teens in the course of next year, and that will reignite the corporate earnings profile, which softened relative to those markets we talked about earlier that had a very strong year, the AI, tech, semi-capex kind of markets. They, by the way, are likely to continue to post strong earnings growth next year, maybe decelerating somewhat, but they will still be growing earnings next year.
Jonathan, would request you to hold that thought. Would love to continue this conversation on the other side, but just need a mandatory short break.
Welcome back. You're still tuned into Trading Hour. We still have with us Jonathan Garner of Morgan Stanley. Jonathan, we have been talking about how global markets have been faring, a lot of macros as well. You are seeing some upside for Japan as well. But, there's some nervousness around yen carry trade. We are talking about yen strengthening, yields are jumping. Do you think this is something which could impact markets globally and Asia as well?
In a word, not really. In a sense, what we're seeing is a normalization of yields in Japan from very low levels, consequent upon the BOJ intervening less in the government bond markets, which is a very healthy development, and the fact that reflation is ongoing. If you look at Japanese 10-year yields, they're about 1.8%. That's still less than a half 10-year yields in the US, for example. And if you look at the underlying situation vis-a-vis the yen, it's actually strengthened this week after we got the details of the fiscal package. And the fiscal package itself is entirely financeable. Japan is amongst the G7 almost unique in running essentially a balanced fiscal position relative to GDP. It's less than 1% of GDP fiscal deficit. So it's more than able to expand its fiscal impetus here. So the yen is undervalued. We think it will strengthen back towards the mid 140s over the next few months. And I think that process began in the last few days.
Jonathan, at Morgan Stanley, how do you all assess the risk of an AI bubble?
Well, I think that's far too broad a term to use. Certainly in recent trading, we're seeing more performance relative activity at the stock level. When we model out the impact on particularly what we specialize in, which is things like the upstream exposures in markets like Japan, Taiwan, and Korea, as I said earlier, we're anticipating continued strong earnings growth, particularly in the memory names, which are very dominant in the Korean market, for example, at least for the next 12 to 18 months. So, within the Asia coverage that we do have some recommended stock exposures in our focus list to it. And overall, yes, it's a sector that's trading on very high valuations to its own history, but it is also exhibiting by far the highest ROE of any sector in our coverage right now. These major companies in Asia are generating 30% ROEs. So obviously they're the equipment suppliers to the infrastructure build out that's going on in the sector globally, and they're doing very well.
Back to India, overweight position, but you are recommending a tight risk position. Can you elaborate a little bit more on that and what you expect in 2026?
Yes, to be precise, we're 75 basis points overweight. At our maximum bullish, as I say, back during those 4 straight years of outperformance, we were at times 200 basis points overweight. So we moderated our bullishness on India this year. But then we have relatively tight risk positions in all markets currently. Ridham Desai and the team just set a Sensex target of 95,000, but again, with a wide bull-bear range around that. And that would certainly be consistent with India outperforming because it gives more upside than we have for overall MSCI emerging markets, where we have something like a 1,400 target.
And what's the bull-bear on the Sensex?
76,000 up to 107,000. So quite a wide range. And that's a feature of markets globally, and we talked at length in our year ahead report about that. If you think just about this year, from early April to now, the EM index is up around 35%, and the Topics index is up over 40% since early April. So we're not, in a sense, in normal times for the kind of performance that we can get, the performance volatility we can get.
Jonathan, come December, you would expect that activity would cool down and people would go on holidays. But the 2 major policy actions that are lined up, at least for our own markets, one being, of course, the RBI policy, and then, of course, the Fed decision on the 10th. Firstly, considering what you spoke about for the Indian economy, you mentioned that earlier policy rates were a little too tight. Do you expect further easing from the Reserve Bank going into this policy and in 2026? What are you pricing in for that? And the same for the Fed as well. Do you see a rate cut on the 10th? And what policy actions are you pricing in for 2026?
So if you start with the RBI, yes, we do expect a 25 basis point rate cut. After that, we'll see on hold probably for a while. In the case of the Fed, it's very balanced. The probabilities are moving around almost by the day. But in the most recent note from my colleague Michael Gapin, he counts, I think, 5 Fed governors as in the no rate cut camp, 4 as in the cutting camp, and 3 as agnostic or undecided, including the chairman of the Federal Reserve. So it's very delicately balanced for the Federal Reserve.
Hey, Jonathan, a pleasure speaking with you. Thank you so much for joining us today with your insights and the outlook on markets, EMs, and a lot more. That was Jonathan Garner of Morgan Stanley. With that, we'll slip into a break. But as we do that, here's a quick programming note. If you're looking for the big bets and market themes for 2026, CNBC TV 18 Access gives you direct access to White Oak Capital AMC's Ashish Sumaya and Prashant Khemka as they share their winning market themes and actionable investment strategies. Ask your questions live on 28th of November at 1:30 p.m. Become a member today on the CNBC TV 18 app or log on to cnbctv18.com/access/plans.
Welcome back. Some tempering of the gains. The all-time high today was 26,310. The Nifty is at 26,240. So come off a bit. In the green though, but just by a smidge, up close to about 0.1%. Kotak Mahindra Bank continues to go strong, sees buying. But on the flip side, profit booking is visible in Bajaj Auto, so that slipped over 1%. Tech Mahindra has come in for some amount of pressure. L&T in the green, up 1%, but from the day's high, that too is seeing some tempering of the gains. Tata Steel, Geo Financial, Eternal, these are some stocks where you are seeing some tempering of the gains and moderation.
Okay, yes, so that's the market update for now. With that, we'll do one thing. We'll wrap on this edition of Trading Hour, but stay tuned. Halftime report is up next with all the market action.
Nifty scales to a new all-time high of over 26,300, while the Sensex powers past 86,000 as the S&P 500 index in the US resumes its AI rally. Morgan Stanley's emerging market strategist Jonathan Garner says India's valuation has turned attractive and he expects earnings growth to pick up next year.
In a likely resolution of a long-pending issue, Tata Power is likely to ink a supplementary power purchase agreement with the Gujarat government for its Mundra unit and restart its operations in December. This pact is likely to be used to ink power purchase agreements with other states as well.
Whirlpool of India sinks after its promoter sells nearly 11% equity after upsizing the offer from the initially indicated 7.5%. The sale results in the Indian arm ceasing to be a subsidiary as the parent stake slips to nearly 40%.
Axis Bank loan growth should continue to be better than the industry. MD and CEO Amitabh Chaudhary tells CNBC TV18 that the bank is keen to merge Axis Max Insurance with Max Financial if rules change. He says he's watchful of MSME loans but doesn't see any cause for worry.
India winning the right to host the Commonwealth Games 2030 in Ahmedabad can spell nearly 15,000 crores in terms of development boom in the city area, going by past records. Infra, realty and hospitality players are likely to be the key beneficiaries. Hello and welcome to Halftime Report, live from the CNBC TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Manglam Malu. Well, what a day it is. We're sparkling for the markets. We're off the day's high, but nonetheless, we have touched that new all-time high for all of the indices, in fact, and the Nifty Bank yesterday's trade itself. So today we do have the Nifty, which is just about come off those highs. So at around 26,250 odd is currently where the Nifty is at. The mid-cap index is seeing profit booking at the top, so slipped into the red. But nonetheless, we do have the advanced decline ratio, which is on the positive side. So let's see whether that sustains. But we do have a couple of heavyweights which are at fresh 52-week highs in today's trading session. So that includes Reliance Industries, Axis Bank, Hero Moto, to name a few, which are at the top of the list in terms of fresh 52-week highs.
Take that point, Ekta. And in fact, we just ticked that mark of a record high for this year. And, it's good that it's come after 14 months, though the broader market has a lot of catching up to do when it comes to earnings growth, when it comes to revenue growth, when it comes to FII flows, and perhaps some certainty on international trade, and which is why this reflection of a record high is absent in the broader markets today in the advanced decline ratio as well. Like you pointed out, now we have almost an even Steven sort of red and green lines coming in out there. And eventually we will watch out for how the second half of trade also pans out, because we have the Sensex options expiry today that plays out. So we'll watch out for all those cues as we move along today's trading session. Kotak Mahindra Bank doing well, HUL fairly well bit, and a couple of these financials, Bajaj Finance, for instance, is at the top of the table when it comes to the gainers on the Nifty. But another stock which is doing well is Glenmark, surging on the back of receiving an establishment inspection report from the US FDA for its Monroe facility in the US. Ekta.
Well, definitely positive news which is coming for Glenmark. In fact, this particular Monroe facility has had a warning letter since June of 2023. So now they've received, it was inspected by the US FDA in June of 2025, where they were issued around 5 observations. And now they've received an establishment inspection report indicating a VAI, or a voluntary action indicated status, indicating that this particular facility is out of the woods and the company is going to start commercial production from Monroe again. The plant is expected to become more significant in terms of a contributor going forward, post these regulatory issues now being ironed out. So that's definitely a positive for Glenmark. In terms of the other key point about about Monroe, Glenmark has made investments of around $100 million in the facility. So it'll be interesting to see what kind of contribution it has going forward in terms of the drugs which will be filed from this plant. But remember that Glenmark has been facing regulatory issues. For example, the import alert on the Badi facility, warning letter to the Goa facility, as well as the Indore facility. So this definitely does come as a positive, and hope that the others would probably see some light of day.
All right, we will monitor the situation as we move forward. The USFDA and pharmaceutical sector having a very fun relationship. Let's move on. Let's talk about Trans-Rail Lighting then, the very first management on the show. Joining us now, Randeep Narang, who's the MD and CEO of the company. Obviously, the discussion will be around the new order win that the company has made in Middle East, North Africa rather. They've said that they're on track for 22 to 25% growth in FY26 on the top line. Let's see where that goes. And strong execution order and timeline. Will that momentum continue or not? Thanks a lot, Mr. Narang, for joining in. A good order win that you've got around 550 crore rupees. But in light of your overall book of, nearly 9,500 crores as an order inflow for this year, it's not moving the needle much. It's just about 5.5% of your targeted order inflow. What I'm curious to know about is the first half of this year, you've done a 61% jump in your revenue and a near 50% jump in your EBITDA. You're still maintaining this 22 to 25% sort of growth target for the full year. Why is that? Do you expect some slowdown in the second half? Or do you believe that you will outpace the guidance that you've given already, given where you are at the first half of this year?
So hi, thank you for having me here. So the actual revenue depends on the state and the quality of the project management focus. So some projects are into engineering approval stage, some are into execution stage. However, we had set a guidance of 23 to 25%, but we are confident that we'll cross 25% plus. And that's the change we're seeing now. Post monsoons, our execution is getting better and picking up faster. So we are confident that we will beat this guidance of 25%, definitely by a percentage point or two.
Okay. Well, Mr. Narang, if you could just give us a sense in terms of what kind of cumulative order inflow are you expecting in the second half of the year and where exactly would it be from sector-wise?
Okay. So principally, we have around 15,000 odd crores of unexecuted order book and around 2,600 crores of L1. We have booked orders worth 3,700 crores this year so far, and a L1 of 2,000 odd crores, 2,600. So we're around 6,000 crores of fresh orders. We are looking at another 3 to 4,000 crores of new orders in the next 5 months. And we are on track for that. And bidding pipeline is there. We're looking at bidding at least 30,000 crores of new orders in the next 4 to 5 months. So we're pretty much, our guidance stands stable and it is in line with what we promised.
All right. So you are on track for that 9,500 to 10,000 crore worth order inflows this year itself. What about the margins? You said it depends on the quality of the execution that you're doing, the quality of the client, etc. You have been guiding an 11.5 to 12% sort of margin range. First half of this year, you've managed to hold on to that 12% mark. Just the way you're going to outpace your guidance on revenue, will you do that on the margins as well?
I think 11.5 to 12% is the steady state we are looking at. Of course, there are some projects which are lower, some are higher. So we are looking at a balanced portfolio of margin management. We believe that 11.5 to 12 is a very stable margin profile, much better than our competitors. And we are therefore focusing to make sure that this happens. And we are pretty confident that we'll maintain it.
Okay. Well, Mr. Narang, you're confident in terms of your revenue as well as your margins. Just wanted to understand what you are doing when it comes to the international business, because you have 2 projects in Bangladesh, we do understand. Totally, I think it's around 30% of your total sales. Give us a sense in terms of the incremental order inflow, how much of it is coming from the international business, and are margins significantly different from, say, the domestic business?
So our current order book is around 60-40, 60 domestic and 40 international as we go along in terms of including the L1s. What we believe is that we will maintain that the India market is booming, the T&D industry is booming in India. And international also, there is a steady growth in Africa and other countries. So what we believe truly is that the margin profile has improved in India and international both. And therefore, we are in that good zone. You also know that we are well diversified backward. We are into towers, conductors, tower testing, making monopoles. So we have a very strong cost structure, execution skills and diversified backward integration. So that helps us to maintain a margin profile.
Right. Speaking about the margin profile itself, I just wanted your thoughts on two things in particular. One, in the second quarter, there was a big jump in your subcontracting expenses. If you could tell us what explains that and where is that likely to settle as a percentage of revenue. And the second part is the brownfield expansion, which is coming on track in the third quarter. How much will that support your operational performance, given that it will be more backward integration in nature than revenue recognition?
Yeah, so that's a good question. I'll answer the second question first. So the backward integration on our brownfield projects is on track and will be in stream by December, that is next month. Our new factory, which is for towers, a greenfield project, will be operational. It's already started slowly moving into the production planning, production startup phase, and by January that will also come into being. A conductor factory will happen by June, July of next year. So we're very much in line with our projections for supporting our revenue growth through our backward integration of factories of towers and conductors. Now, on your assets part, what you mentioned, we are particularly looking at higher execution happening. And as revenue is growing, there is also a certain amount of retention cost. There's a certain amount of inventory buildup, which is temporary and which will ease off by March. So we already focused on that, and that will be closed and controlled by March.
Okay. All right, Mr. Narang, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Transrail Lighting. They have increased their guidance in terms of the revenue. They're expecting around 26 to 27% growth versus 22 to 25% that they anticipated earlier. And they are also expecting the margins to be stable at around 11.5%. We'll take a short break, but up next, we'll focus on the markets. Pankaj Tibriwala of Ikigai Asset Managers will join in to discuss the markets. Stay tuned.
Welcome back. The Nifty and the Sensex have hit a record high. The Nifty bank as well, as has the mid-cap index. But are your portfolios feeling that or not? Let's get in our market master today. We do have with us Pankaj Tibrewal of Ikigai, founder and CIO at Ikigai Asset Manager. Pankaj, always a pleasure speaking with you. It's one of those, ticking the box sort of record highs where, yes, the markets hit that, but, portfolios aren't feeling the same. The street is worried about earnings returning. The street is worried about growth returning. The street is worried about FIIs returning, and it's worried a little about the uncertainty around trade as well. Amidst all of this, where do you think one should actually invest to make their portfolios feel like they're at a record high?
Good afternoon. I think your observation is absolutely right. So let's look at the data. So if you look at Nifty, which is almost at record highs, but if you look at the median constituent of Nifty, it's down by about 8%. Similarly, if you look at the small cap index, it's about 8% away from its all-time high. But the median constituent of small cap index is on an average down by 21%. And if you look at the BSE 500, the median constituent is down by about 18%. So very few handful stocks have taken the index higher, but the breadth of the market has been extremely narrow and poor. And we have seen this in the previous cycles also, that sometimes the index is driven by few names and few stocks, but the breadth has been extremely poor. Now, what can change this? I think finally stocks are slave of earnings and flows. And when we look at earnings this quarter, I think it was a little better than expected. After many quarters, we saw an upgrade cycle rather than a downgrade cycle on an aggregate basis. And let's, Mangalam, decode the entire earnings space. So 500 companies reported earnings growth of 15%. And if I bifurcate into BFSI and non-BFSI, BFSI is about 92 companies, earnings growth of 7%. And non-BFSI, which is bulk of 408 companies, is about 21% earnings growth. Now look at the market cap earnings growth. The large caps delivered 9%, mid caps delivered 31%, and small caps after a long time delivered 35%. But a caveat there is that both in mid and small caps, a decent portion is driven by oil and gas companies. For example, in mid cap, it was HPCL. In small caps, it was Cochin Refinery, maybe MRPL and stuff like that, where we need to adjust for that. But even after adjusting, the earnings growth was quite healthy for mid and small cap space. So I think once there is more consistency for a couple of quarters, I think you could see the breadth also reviving back. But obviously, as you rightly said, market all-time highs, but portfolio of individual investors not showing that.
Okay. But Pankaj, if you had to just narrow down on maybe a couple of pockets that you like within the market at this point, within the mid-cap space especially, what would they be?
So one space where we have been positive is the auto ancillary space. I think the auto cycle after a long time seems to be reviving back. The ground feedback continues to be positive. Even after the festive season, the momentum on four-wheeler, two-wheeler, and even commercial vehicles have started to be quite positive. That's the feedback we are getting from the ground. And after a long time, auto ancillary seems to be in a sweet spot in the mid and small cap space, and especially the companies which are also pivoting themselves away from auto to non-auto. And there are many companies where the next 3-year outlook on non-auto, which is defense, aerospace, semiconductors, and maybe industrials, is shaping up to be very good, because a lot of global suppliers are looking for manufacturing on precision engineering, and many of them fit the bill. So that's a space which we like. The second is the NBFC and the banking space. I think the NIM compression and the worst asset quality is behind us, and that's clearly being shown in large cap, mid cap banks right now. Earnings growth from here on should be quite strong for the banking space overall. And if you look at the lending, which is non-NBFC as well. But in non-NBFC, we have seen a sharp run-up already happen. So we need to be careful on valuations, but that's a space which can show you strong earnings growth. The third space where it's a contrarian call, I think, is metals and mining. I think you have seen a very strong quarter last quarter. But going forward also, I think that space globally is looking to be quite good. And you have seen a very sharp jump in copper, followed by zinc and other metals. I think that should reflect in the overall stock prices as you move ahead over the next few quarters.
All right,
So
auto
these are few
ancillaries.
topics.
Got that. Auto ancillaries, you like NBFCs, banks rather, and also the metal space, which is a contra call. So we'll take these on board and wish that earnings do actually come back with a vengeance in the second half of this year, and then perhaps get you more on the consumption space and maybe a word on the IPO space as well, as more IPOs. Nearly 30,000 crore worth paper is likely to be supplied in December. With that, we'll take a short break, and as we do that, a quick programming note. Thank you, Pankaj, for joining in. If you're looking for big bets and market themes for 2026 as we move towards the start of the new year, CNBC TV18 Access gives you direct access, as the name suggests, to White Oak Capital, AMC's Ashish Somaya and Prashant Kemkar, as they share their winning market themes and actionable investment strategies. You can ask your questions live on 28th of November, that's tomorrow, at 1:30 p.m. Become a member today on the CNBC TV18 app or log on to cnbctv18.com/access/plans. Watching us here on Halftime Report on CNBC TV 18 from the FNO desk, I'm just looking at a couple of trends at midday for the market. Yes, we hit a record high on the Nifty, the Sensex, and even the Nifty Bank in today's trading session. The mid-cap index was yesterday, though we're off those highs right now. From today's high, we've given up around 70-80 points on the frontline index, which is usually par for the course. The only thing that we have to watch out for now is some profit taking, which is taking place in the broader end of the market, which is visible in one, the mid-cap index not doing too well, currently lower by almost 90 points. And the advanced decline also comes up for you with a line which was far outnumbering the red one. The green line has now come closer. In fact, the red line has moved above the green line. So 1450 stocks which are declining for about 1400 stocks which are advancing. So the second half becomes extremely crucial. And the other thing is that the top contributors on the Nifty are just from the Nifty Bank. In fact, 3 of them belong to the Nifty Bank itself. So the market has to really broaden out, and Reliance has actually been the top dragger on the way down. Now, as we look at the market as it progresses, the important levels to watch out for, the 26,300 call writers are fairly active at 83 rupees, telling you that the market may face some sort of congestion or supply at around 26,350 to 26,400 thereabouts. But where equal vociferous writing is seen in the 26,300 put and the 26,200 put. So the 26,300 put comes up for you, premium of close to around 150 rupees, and the premium is actually down, which tells you that there has been a lot of writing which has taken place out there. So around 26,150, 26,200, there is support, and the 26,200 put as well for a premium of 100 rupees, telling you that there is support around 26,100. So 26,100 to 26,150 is the support, whereas on the way up, 26,350 to 26,400 is the supply. That's basically the sum and substance of the options data. Just a couple of factors we need to watch out for. The Nifty put call ratio from levels of 1.41 yesterday, which was at an overheated zone, came down to 1.38 earlier and now to 1.25. Around 1.2 is where the overheated zone ends. So we'll have to watch out for more moderation out there. And the second part is the Sensex weekly options expiry today as well. So could we see some impact of that on the Nifty in the last hour or not is something that we will be tracking. One stock I'm looking at, Samman Capital, was in FNO ban all of the last series. Does it get into ban again on day 1, day 2 of the December series or not is something we'll be tracking.
Okay, all right, Manglam. Thanks very much for that. So that's on the entire FNO space at this point in time. We'll take a short break, but up next, Manisha Gupta will be with us. She has with her a guest, Arun Raste, joining in to discuss the commodity space. Stay tuned.
Welcome back. Joining us on the show now is Arun Raste, he's MD and CEO at NCDEX. Mr. Raste, hi, thank you so much for joining in, and congratulations are in order because 770 crores is what you've raised as a preferential share issue, and you also are going on for the equity and derivative market there. What we do also understand is that it is the cash segment that you would be starting first on. Why do not you update our viewers with all of that?
Thank you, Manisha. Good noon. So, as you mentioned, we did raise about 770 odd crores from both domestic and international investors. We did a fresh round of equity, about 40 odd percent. We will primarily use it for the equity and equity derivative segment. We did get SEBI approval a few months ago for starting our equity and equity derivative segment. So, in terms of the process, what we will do is we will start the equities first, and then we'll move for equities. But before that, there is one more addition, which probably you haven't heard about. We also intend to start a mutual fund platform, which will probably the first to go online, because that is not linked to the trading and surveillance system. So we can have a separate platform, and through which we can do the mutual fund distribution. So that will be our first offering. And that should be early in the next financial year, very early, possibly the beginning of the financial year itself, that we'll start it. And then later, as our systems and things in place, we will go for equity. And then after that, we'll go for equity derivatives. So in terms of, if you're looking at calendar, probably next calendar year and latest by next financial year, all the three should be up and running.
Mr. Raste, the other thing that we also have been hearing about is you acquiring a 20% stake in the Sri Lanka commodity and financial derivative markets. What is that about?
No, so this is all subject to regulations, both in Sri Lanka and India. What we have agreed with the Colombo Stock Exchanges, if they get approval to set up equivalent of a NCDEX in Sri Lanka, we will be picking up stake in that. But that will be subject to regulatory authorities in Sri Lanka, SEBI approvals in India, as also DA or MEA as approvals required. Subject to approvals, we will be taking that. So what we have agreed with Colombo Stock Exchanges, they don't have derivatives at the moment in Sri Lanka, either financial nor commodity. So this new exchange, which might come up, will be dealing with both commodities as well as financial derivatives. And what we have agreed is we will be operating that for some time. We will be providing expertise, we will be providing them manpower in the initial stage, train their people, and also pick some stakes. So put together for our efforts and whatever we are putting money we are putting in, we will get about 20% in this new exchange. And that will be possibly subject to regulatory approvals. It should start sometime next year or a year after that.
Mr. Raste, just taking a step back, and as you mentioned that the first thing that will go live is your launch of mutual fund distribution platform. We do also understand is that it will function independently when it comes to the exchange's main trading and settlement system. So would you say the time that you're talking about, the timeline that you're talking about, is the timeline that you would require to set up operations and technology, etc.?
Exactly. So if you're setting up an exchange or if you're setting up a platform, there are three requirements. One is the technology part of it, one is the human beings, the people who will run it, and third is the market participants. So we are working on all the three fronts. We intend to hire something like say 100 to 150 people over the next 12 months to take care of all the three functions. As I speak, my team is at the moment speaking to somebody who is a technology provider for the mutual fund platform technology. And as far as the systems for the equity part is concerned, we have already floated the RFP, and hopefully we should close it by end of next month.
Mr. Raste, what are the plans looking like when it comes to equity and derivatives therein? Because you have BSE and NSE standing up as tall competition for you.
See, competition is the game, but I will just put some numbers in front of you. So I'll start with mutual funds. If you're looking at mutual funds, if you're looking at say 15 years ago, what was the number of people who were investing in mutual funds? It was just about 50 odd lakhs. Today it is 5 crore unique accounts. Right? So compounded growth or last 12 or 13 years, we have grown almost 20 times. And this growth will continue. So I was looking at some of the developed markets, maybe US or UK. 50% of the population is invested either through direct equities or mutual funds in those markets. If you look at that, compare that with India, it is just about 15%, 14 odd percent. So the scope is humongous, 3 times bigger than where we are right now. If you look at equities, just last 5 years, if you look at data, year on year, every year you're adding about 2 crore people. Now, even with this, if you look at, mutual fund growth, see the biggest growth now coming into the mutual fund space is not from the top 30 cities. It is coming from cities. And that is the place where NCDX has big roots. Thanks to our agri-commodity background, we are present in more places than the existing players. So definitely, the population in rural areas which has not derived benefit of the growth in capital markets, possibly we will give them the opportunity.
Yeah.
Look at it from this perspective. I get a woman who is investing about 250 rupees in SIP every month, who is a customer of ours. We have about 12 lakh customers, farmers associated with us. Just 250 rupees a month if they start investing in SIP. My mutual fund portfolio will just fly from day one, right? So we will be looking at new markets, newer channels. Definitely, there is space for 2 or 3 exchanges more in a country like India. Because if you look at a country like US, there are some 12 or 13 exchanges. China has 3 or 4 major exchanges. India has just 2. So there is enough space for more exchanges to come in. I don't see the big players will be affected by our entry because our target group is different and the pie is growing. Pie is growing exponentially. So there is space for everybody. We'll find our niche.
Oh, yes. Apart from BSE and NSE, now NCDX as well coming in with equity and derivatives foray. And of course, the mutual fund platform could start in much, much earlier.
Okay. All right, Manisha. Thanks very much for taking us through that conversation. We need to take a short break. But up next, stay tuned for the conversation that we have lined up. SMS Pharma, that stock was up around 15% in yesterday's trading session. We'll be talking to the management on the other side. Stay tuned.